Hello, everyone, and welcome to the big show. This is Investing and Trading Live. As always, my name is Josh Lilquist, and we are happy to have you with us today. As always, I do have my good friend and my good pal. He is the one and the only, I think the only, Mr. Al Connickson.
Good morning, Josh. I believe I am the only Al Connickson.
Well, you're the only one that I know. There could be another one.
It's not a very common name. Al is, but Connickson is not. So if you know anybody named Connickson, we're probably related.
There you go.
Say hi for me.
There you go. It's good to have you on the show as always. And we got an action-packed show here today. We had an interesting week here. The Fitch rating, the U.S. credit rating downgraded from AAA to AA plus is what it looks like here. And the markets really reacted off of that.
They did.
So we're going to discuss that a little bit here, some of the opportunities off of that. We're going to take a peek at the U.S. dollar, do a quick market update. But our sponsor, Online Trading Academy, teaching people just like you for over 26 years how to navigate these financial markets. We're seeing some phenomenal opportunity, and a lot of people coming into our investing classes trying to make their life better. And how do they do that? Is by making smart investing and trading decisions. So, Al, as we're talking about here, the Fitch rating downgraded, and especially Wednesdays when the impact really happened, the market's really cratering on Wednesday, gapping down. And really from the highs from last week, we're down. It doesn't look like a lot, but it's about 2.6%, roughly, based on when you listen to the show here. Now, that it's showing some major weakness into the market, and there are some demand zones under current price that could potentially prop the market back up. But that's the great thing and the beauty about the financial markets is it doesn't matter what's happening in the news. Obviously, it's earnings season again. Some major notables here. We got over 500 companies that reported on Thursday.
Yeah, big week.
Looks like 116 on Friday, and then the same thing next week. We have earnings Monday. There's over 100, over 300 Tuesday, and over 250 on Wednesday. So just some big market movers that could potentially show some volatility, which is exactly what we want to see in the market. What's your take on these markets? And do you have a take on the Fitch downgrade? And what do you see moving forward here with the economy and the great stock market?
A lot of questions there, Josh.
Answer one at a time.
Okay, let's see if I can remember those.
We might have a whole hour show to answer each one of those.
But during earnings season, we always you always see the volatility increase. We're seeing that. We're recording this show on Thursday. Thursday after the market closes, Apple and Amazon will report their earnings, and whatever they say, whatever happens there, probably is going to have a huge impact on the direction of the market going forward. But you mentioned the Fitch downgrade. What happened there? The United States has been for many, many years the strongest economy in the world. And when you have anybody saying anything that's negative, when you have a reduction in the credit rating by a company like Fitch, it kind of shakes the confidence globally. It's not just here, because this economy really kind of has an impact on everything globally now.
And it's funny you mentioned that. J.P. Morgan's Jamie Dimon, he argues that the U.S. should have the world's best credit rating.
Sure.
So there's always opinions out there.
Yeah, but and that's what people like Jamie Dimon. I mean, I have a lot of respect for Jamie Dimon. He has been very accurate in his calls and predictions over the years, except just remember, whether it's Jamie Dimon or the head of Goldman Sachs or Morgan Stanley or Michael Wilson from Morgan Stanley, their suggestions, their ideas, and their analysis, basically their guesses, that's their opinion. And what we know from watching these markets over time is that opinions shouldn't be what you base your decisions on,
especially as a retail investor. You can't listen to what's being said out there.
Yeah, and right now, we're seeing this volatility. We saw what happened with the Fitch rating. We're going to see what happens with Apple and Amazon's earnings. But you know what? Sometimes the impact, oftentimes, if not most of the time, the impact is short-lived. And then we get back to what is true valuation, because the market and assets always try to seek true valuation. And speaking of that, I think most people have heard of this guy named Warren Buffett.
I think I've heard of him once.
Yeah, he's done a pretty good job over the years.
They call him Uncle Warren.
He thinks the single most accurate a prediction of where the market is and where it should be is what we call the Buffett indicator.
Sure.
And right now, that is sitting right about 171. It was as of the other day. And what he says is that when that number, and what it is, you're looking at the total market cap of all the stocks and then compare that to GDP. When that market cap percentage-wise exceeds 100, stocks are overvalued. And as I mentioned, right now it's about 171. He thinks that at 100%, that's when things are truly valued. So really what he's saying is that that's not where there are as many good investment ideas. When it's around 70 or 80%, that's when he is active in the market. But at 171, that's when he starts to pull back. That's where we are now. And I'm not saying that means the market is going to pull back. It's been an accurate predictor in the past. But maybe what is more important to us, especially if you are looking at increasing the income that you have, maybe additional income, maybe you're looking at doing some things now that you haven't been able to do, or maybe you're just looking at saving for the future. If that's the case, then you need to look maybe at more what factually moves things on a shorter term basis. And that's what our core strategy does. It shows you how to do that, also how to predict, not predict, but look at the probabilities of major moves down the road, major turning points where some of the best positions can be taken. But what we're doing is we're just getting rid of a lot of that ancillary noise that's out there, the use of opinions or guesses, and just basing our decisions on what factually moves price. And that is the most important thing for any investor or trader to take into consideration.
Yeah, and that all comes down to, you mentioned our core strategy, which is supply and demand. It's the economic law of supply and demand. When there's more buyers, price has to go up. More sellers, price has to go down. And that's what that core strategy is identifying, is where are the potential buyers and sellers, and where do we as regular traders, investors, want to get into our investments at low risk, high reward, high probability entry points into the financial markets. And that's what it's all about, is having all those components combined to make a smart investing decision. And that way you can remove the emotion and do that with confidence. We have investing classes to introduce you to that strategy, to show you what that looks like, to make smart investing decisions and how to do that with confidence. Text the word investing right now to the number 210-210 for 2 seats for a free class to see the strategy. It's been, we've been doing this for over 26 years, and many instructors that are training our students how to do that. Text investing to the number 210 right now for 2 seats and the jumbo pack. There's some strategies on the jumbo pack to help you get started right away. Make sure to text in for that jumbo pack and those 2 seats. Investing to the number 210-210. Coming up next, we have a lot of people that are looking to better their lives with more income strategies. Let's talk about those strategies and the assets that have those best opportunities. This is Josh and Al, Investing and Trading Live. We will be right back.